Welcome. It is June the 2nd, another brand new month of trading, and we have to deal with the dynamics of the end of May. We left Friday's market just wanting to hold long in the close. We thought the market would make another new high, would definitely close above at least at 1918 and or higher, and it did. And that was pretty much a given. I mean, if you're an institutional money manager, I mean, you're not going to shoot yourself in the foot. You're going to get as much compensation as you can. You're operating under the principles of self-interest, as we all do, so not too difficult to make that call, but it's always gratifying to see it actually come to fruition. So the indexes are up around the globe. Chinese official state manufacturing PMI number came in north of 50. It beat the estimate. The numbers were mixed out of Europe, but France and Italy continue to have problems. In fact, the CAC was the only European index that was off. So we don't have really robust growth numbers-wise outside of the United States. Today we're going to get the ISM manufacturing number, and it's forecast to be at 55 plus. So the United States is still seen as the growth vehicle along with China, and Europe is hoping to break out of its mold. Thursday, the European Central Bank is expected to do something to combat low inflation and low growth. They're even talking about the ECB could announce negative interest rates where the banks have to pay the ECB to park funds with them. So I don't know exactly what the numbers will be, but the European Central Bank managers and people that speak for them started floating balloons last week saying that it wouldn't be a big across-the-board sweeping change. It would be incremental. So we have the ADP number on Wednesday, we have the ECB announcement on Thursday, and we have Friday's non-farm payrolls, and everybody's expecting at least 200,000 in job growth and the unemployment rate going to 6.3%. So the economic numbers this week on paper could favor the stock markets, and if the ECB does some cutting, it would favor the U.S. dollar. The two biggest plays this year that have not worked has been shorting treasuries because interest rates were going to go higher, and that's been the biggest miss, and long the dollar, short the yen. That hasn't worked out very well. So the large institutional money managers have not done as well off their two biggest plays so far this year. So it is a post-auction week that usually yields lower prices. We do have some news. We have markets PMI, which manufacturer PMI at 56.2. Won't play. It'll be covered by the ISM number. ISM manufacturing is called at 55.5. Manufacturing prices is called at 56.8, a measure of inflation, and sometimes that's 56.8. Sometimes it can lead to commentary questioning the strength of this particular number, then construction spending at plus 0.7. No one will pay any attention to construction spending. So the market's focus is ISM manufacturing this morning. And if it beats that number, it'll hurt the financials. We're dealing with a D pattern right here, TPO-wise, and it's starting to build volume. The more we trade below 0.09, the more it can take on a B shape. So we got our first sell 8 to 12. and that would allow you to get short against the mode mean, and then 15 to 19. On the buy side, because I think it's going lower, I've got 29 to 01, but depending on the news, we may have to go up to 05s to get in. Don't know. So when you go back and look at the structure, this 04, 125 even to 125.04 is potential support. But I think the market is pointed lower. We are to head down. It is a post-auction week, so we have several things that ought to get us down. At least test that round number or go for stops below 125. So today's news is significant. It is a big news week with the most significant news of the month coming out in Friday's non-farm payroll number. As we get closer to Friday, it'll tend to freeze our markets. The European Central Bank announcement on Thursday will tend to freeze currencies because it will set the trading for the next month. It's an important announcement. Okay, the knob spread came in on Friday. Profit taking, a lot of liquidation of the 30-year. The action in options was both in the puts. It has been in the puts since last Wednesday on the 10-year. It went to the put side on Friday in the 30-year. So large institutional money managers took protection via puts. And these guys are smart. When they come in and play, you know, they're long, they're riding the market up, they expect the market to trade up through the 7-year auction, then they start buying puts on Wednesday. So it's two different positions. They've got to manage both, but they've essentially locked in trading profits by doing that, and they're getting ready for the next rotation. And they're placing a guess that it's going to be lower. So right here we've got the 4 to 8 area as our sell zone for sell 1. And then we've got the last rotate up was 16, so we'll make 11 to 15 sell 2. Going to have some pretty good support down here in the 136.20 to 24 area, so we'll play for 25 to 21 for buy 1. On the idea we're going to head lower, and then 13 to 17 for buy 2. Okay, gold was relatively quiet over the weekend. There was some news out of Russia. Russia has given the Ukraine an extra 5 days to pay for the gas that they owe them. Remember, the IMF about a month ago said if the eastern Ukraine falls and is taken away from the Ukraine, they'll have to rewrite the whole deal. And the reason the IMF did that is that the manufacturing base in the Ukraine is in the eastern Ukraine. It's not in the western Ukraine. So what has Russia done to make sure that they get the West to pay for Ukraine's gas bill? They've kind of backed off from forcing the issue over the eastern Ukraine. The news is mixed. Out of the Ukraine, it's hard to know who's winning or who's taking the most casualties. My guess is Russia is probably still funding and supplying the rebels with munitions, with men. And you can see that in the shoulder-fired missiles, anti-aircraft missiles called man-pads that are taking down Ukrainian helicopters right now. Hard to really see a full-scale war breaking out between the Ukraine and Russia. I mean, it would be foolish on Ukraine's point. Probably going to see some more autonomy between the Ukraine and the eastern Ukraine, which is what the people want. I don't think they really want to go under, become a Russian province again. They've been there, done that, had that experience. So we're kind of like where we were on Friday, where we like this 40-42 area. We'll leave that. It's the same. Then we have all that volume down at 35 that we've been talking about. So the buy 2 will be 35 plus or minus. On the sell side, we've rejected prices above 48, so we'll make 50 plus or minus sell 1. And then the last rotate up was 56, so we'll make 54, 56 for sell 2. And kind of look for a quiet market today. Famous last words, right? Gold's a rocket. And just like crude, you cannot become complacent just because you think it's going to be quiet. Those are the days that you have to be the most careful. Okay, crude oil is maintaining a range. We didn't think it would break over the weekend because of what could happen between Vietnam and China, Japan and China. China's upset because of potential electric submarine deal between Japan and Australia. Now, why would China be upset about Australia or Japan having these silent submarines protecting their home waters? Makes it more difficult for China to come in and throw their weight around. Not that they're going to invade Australia or Japan, but they might take some stuff from them, or they might make them keep their mouths shut. So we like the sell on Friday in the 50 to 75 area. The high was 25. 50 was a stretch because we closed below 103. I didn't actually, based on the close on Friday, we'd have been selling 103s, 103 and a quarters, and that still looks good. Forget, I did not come back and update the markets. We'll make the buck to 25 and then 50 to 75 sell 2. We got the, I think we're headed towards at 100 before this is over, so we've got volume down here at 102, so we'll make 102, 102 and a quarter by 1, and we'll make 101 and a quarter, 150 by 2. Realize that's a stretch, but if we break 102.50, 15 handles would take us down to 101 and a quarter. So we got a shot, pretty fair shot of, if we do break, get some momentum going of, making it down to 101.50 anyway. Quick look at the euro. If the central bank does cut interest rates further, hot money would view that as a negative. Whoever has the highest interest rates is where they go sell the low interest rate country or currency, they buy the high interest rate ones. So if the European bank acts as they said they were going to act, the euro should come off a little bit more. We've said for a couple of weeks that we think before the selling's over, we're going to see 135 in the euro, and I still think that's reasonable. Okay, we do have a buyer in this 36, 36.90 area. That's pretty much where it has been. Then we'll make 75 by 2. On the sell side, 25 to 35 looks good. I mean, that's where resistance is. And then 45 to 55 for sell 2, the upper part of the trading range. I just, with the European Central Bank to speak this week, I tends to freeze a market. And because this will be the most important announcement for a long time, probably will sideline significant players. Okay, the E-mini pointed higher into the month. We knew the dynamics and the incentives all favored a higher close on Friday, and we got it. Should not surprise anybody. The issue is follow through buying today. And a lot of people, just because of the number of days of the run, the strength, would have sold, traders would have sold Friday's close. So how much staying power do they have this morning? And I want to show you something on a bar chart because you'll get a better picture. This is a pretty unusual occurrence. It happens, and it's certainly happened in this market when we've had these big runs. 6 days straight up, 6 or 7. Right here we've got effectively 8 to 9. So we've had 1, 2, 3, 4, 5, 6, 7, 8, 9 days up. And we have the breakout from this 86.50 to 92.50 area. So say 90 plus or minus a couple should be retested at some point. So a put play would be buying on 90 puts, 75 puts, depending on how deep you think the market might go. This rally began and came out of the 75 area. And so this market tends to retest the origination of the starting point of breakouts. So we've got 75 to 92.5 is pretty good support, and we've been up for 9 days. And just by virtue of the fact, end of the month, we know it's going to close strong. We're going to get a chance to sell a higher price. That would encourage some people to go short on the close on Friday. And that could be the impetus that takes us a little bit higher this morning, catching those people short, making it painful for them. We've always laughed and we've always joked that the E-mini, the big players that push and move that market around, almost guarantee a move that will hurt the most people in the short run. And that's the way the game's played, and you just have to be cognizant of it. So we've got a market number at 25. The high is 24. We don't have a lot of volume. The clean break in the volume is down at 14. Right down in here. And that's probably really, really, really good support. So I really don't mind the idea of getting short in this 24 to 26 area, just in the fact we've been up 9 days. No other reason than that. If we fail to extend the overnight session high, I think that's probably the easiest or best setup we're going to get short. It usually is. And the first place I'm interested in buying is this 14 area, so we'll make 15 to 17 buy 1, and then 10 to 12 buy 2. Now, if the market is stronger than I think it is, 20 is going to hold. And they're going to make us pay up, so we may have a little quick long trade off of 20 to test the 24, 25 area. But I think the key thing is right today is whether we can take out 25 or not, and the fact that we've been up for 9 days in a row, straight up. That's pretty unusual. Okay, ISM is the market's focus, 55 point, I believe it was 0.5 if memory, 55.5. Construction spending plus 7/10. So those are the two news items, and ISM will be the market's focused. Any questions? It'll take about 15 minutes to get everything posted. I'm going to get busy on that right now. In the meantime, good trading. I'll be back up as soon as I can.